NVIDIA shares recovering today after closing down 5% on Wednesday. The chip giant has lost $900 billion since its all-time high back in June. This comes as earnings for some of NVIDIA's biggest customers, those large-cap tech names, have been a bit mixed. Our next guest, though, seeing some opportunity, saying that the volatility represents a reason to buy. Joining us now, we want to bring in Antoine Chakaiban. He is a technology infrastructure analyst at New Street Research. Antoine, it's great to have you here. So it looks like you recently upgraded NVIDIA to a buy. You've got a $120 price target on the stock. And this comes at a time when it seems like many investors are still waiting on the sidelines when it comes to NVIDIA. What makes you bullish at this point?
Thanks, Sean and Matt, for having me. So, yes, I would say that, first of all, since the peak of June, NVIDIA's stock has pulled back by nearly 30%. So that's underperforming most other semiconductor stocks that are exposed to data center AI. And the reality is that, even despite the concerns, the recent concerns on the company, the Blackwell delay, concerns around macro, we still expect NVIDIA to dominate the data center XPU market. And we see in-house XPUs doing well as well, like companies like Amazon, Google are developing their own in-house XPUs. We also see alternatives to NVIDIA GPUs like AMD's GPUs also ramping, but we expect NVIDIA to remain dominant in a market that is growing very, very fast. And so I would say that we see little downside to expectations for NVIDIA's data center revenues. We see little downside to valuation, even the stock is now trading below the trough multiple of the 2018-2019 down cycle. And so that makes it a very good investment at the moment.
Here we have the 4-hour price chart for NVIDIA Corporation, stock ticker NVDA. So as we can see here, the stock has taken a massive move lower, and we've broken through some very important support zones in the process. Currently, what we're looking at as far as price lows are found at the 9069 level, which was the price low that was posted on the August 5th trading session. To the top side, near-term resistance zones, as I have marked in previous videos, currently come in at roughly 119.80. Overall, these movements in share prices have largely depended upon broader action within the market as a whole. Specifically, we have seen major declines in the S&P 500 and in the NASDAQ, and this has brought down major mega-cap technology companies like Microsoft and Apple as well. Given the fact that this selling pressure has been broad-based, it's not entirely surprising to see an overvalued company like NVIDIA start to trade lower. When I say overvalued, to some extent, I am putting this in air quotes because this is a common criticism that is being directed at the company and its share valuation. Of course, a lot of this outlook does depend on the broader time frame and the extent to which shareholders are willing to hold on to their positions for extended periods of time. If we move into the price chart here, we can see that near-term price moves have sent share prices below the entire exponential moving average cluster on the 4-hour chart. Of course, this is a very bearish development for a wide number of reasons. Specifically, what we can see here is that share prices are now likely to start to encounter resistance levels at lower and lower levels. As we can see, given the fact that share price action is now trading below the exponential moving average cluster, we can now expect share prices to run into resistance levels as we approach those levels from the bottom. For these reasons, what I would really need to see would be an extension here and a final break of this 119.80 level so that we can not only break above prior historical support zones, which were found during the August 1st trading session, but also above the exponential moving average cluster as well. To the downside, a break of this prior support zone would be quite significant for a few different reasons. One, it would suggest that resistance had then moved up to roughly 108. And then to the downside, what we would really be looking at that point would be a further Fibonacci retracement test, which comes in at the near-term 78.6% Fibonacci retracement level. If we zoom out a bit here on the chart, we can see how we arrive at this level. Specifically, what we're looking at here would be the low that comes in during the April 19 trading session, posting at $80.64 per share. To the top side, we can see that this price move, this bullish price wave, extends all the way to the stock's all-time highs, which were posted during the June 20th trading session. Specifically, these come in at 140.76. So if we're looking at this broader term move here, we can see that these price declines have been very significant. We have already broken through the 23.6%, 38.2%, 50%, and 61.8% Fibonacci support zones. Unfortunately, for bullish investors, what this really means is that the next line in the sand comes in at the 78.6% Fibonacci retracement, which is found just above the $89 level. For these reasons, historical support zones at near-term levels are critically important. Specifically, if we're looking at the $90.69 lows, we can see that this comes within very close proximity to this 78.6% Fibonacci support zone. In some sense, this can actually be viewed as a reason to start to buy the stock. If we do view this area as a potential level of support, this could lead to share prices moving higher here. In addition to that, we should point to the fact that trading volumes here are starting to rise on the 4-hour time frame, as we can see here. However, at the same time, the stock's indicator reading in the relative strength index is showing a series of price moves lower, suggesting that negative momentum is currently defining share price action. As long as this negative relative strength index condition continues, we would expect to see some level of resistance form for these stock levels at lower prices. Currently, there are two factors that would likely change this outlook. One would be the fact that share price action sends the relative strength index into oversold territory, and then the stock is able to recover a bit and roll out of that oversold territory. If this did occur, we could see a breakage in this downtrend declining move in the share price momentum, as measured by the relative strength index. One other potential scenario would be the development of a bullish divergence forming within the relative strength index itself. Specifically, this could occur if we started to see movements higher in the relative strength index, even while share prices themselves continue to move lower. If we move down to the 30-minute time frame, we can see two important resistance levels that have now become visible. First, we can see 108.80 as the price high, which was generated during the August 7 trading session. From there, we can see that resistance has also formed a bit higher here at this 119.80 level that I've mentioned. On the 30-minute time frame, what we would need to see would be a move above the 111 mark in order to break above the stock's exponential moving average cluster. Overall, this is a significant amount of downside price action that has influenced prices and the potential for further gains here throughout the remainder of the summer. If we continue to see prices move lower below these aforementioned support zones, we could expect to see a full retracement in the stock's prior moves. In the worst case scenario, this could mean price declines of potentially falling to $75.40. For all of these reasons, near-term price action will become critically important, and we will continue to develop these support and resistance levels over the next few trading sessions. Here's the current market analysis for NVIDIA Corporation, stock ticker NVDA. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.